Okay, let's dive into this massive orbital gold rush that is literally transforming science fiction into a very real, multi-trillion-dollar commercial reality. Today, we're breaking down a monumental shift in human infrastructure. We aren't just talking about planting flags on the moon anymore. We are looking at a fundamental rewiring of the global economy, stretching all the way from low Earth orbit to the lunar South Pole. Here is our roadmap for today. We'll start with the orbital gold rush, look at the heavyweights of the cosmos, check out the crucial small space players, dive into space ETFs and portfolios, hit you with a reality check on the bottlenecks, and wrap up with a quick educational disclaimer and conclusion. Section 1, the orbital gold rush, unlocking a multi-trillion-dollar frontier. The big takeaway here is that space, it's just not a government-only research domain anymore. It is undergoing a profound structural transition into a booming commercial technology ecosystem. The days of state monopolies up in orbit are officially over. To really grasp the scale of this, think about this projection. By 2035, McKinsey expects the global space economy to absolutely explode to $1.8 trillion. Trillion with a T. This is driven by a massive macroeconomic shift, where commercial spending is actually expected to outpace government spending by a ratio of 2 to 1 across nearly all subsectors later this decade. But where exactly is all this commercial money going? So what's the actual plan here? What is all this rush actually about? Well, it's about laying down heavy, permanent infrastructure. We are talking about building a sustained moon base to harvest water ice for rocket propellant. We're looking at insane concepts like orbital AI data centers powered by pure, uninterrupted solar energy. We've got the early groundwork for mining precious metals from asteroids, and something that's already happening right now, direct-to-device cellular networks that will eventually blanket the entire globe. This right here is the backbone of the new space economy. To foster a true cislunar economy, NASA has a highly specific roadmap to build a permanent, hundreds of square miles outpost near the lunar South Pole. Phase 1, which is happening right now through 2029, is all about rapid robotic scouting, deploying rovers, and flying these things called moonfall drones. Then, Phase 2 kicks in around 2029, bringing early habitation and nuclear surface power. And by 2032, Phase 3 aims for a sustained human presence. It's basically a stepping stone to Mars, and, honestly, a massive catalyst for commercial contracts. Moving on to Section 2, heavyweights of the cosmos, the giants building the backbone. Let's look at the major players capturing all this massive capital influx. Now, you really can't talk about space without addressing the elephant in the room. The entire sector is surging right now in anticipation of a massive SpaceX IPO. They are reportedly targeting an unprecedented valuation between $1.5 and $2 trillion. This impending liquidity event is acting as a massive valuation anchor. It's essentially redefining what every other commercial space company might be worth, stimulating a massive re-rating across the whole sector. To ground this in reality, consider the established defense primes. We're talking about companies like Boeing, Lockheed Martin, Northrop Grumman, and L3 Harris. They possess market caps ranging from $54 billion all the way up to over $160 billion. These guys are the defensive anchors. Why? Because they possess the steady cash flows and those massive, highly reliable government contracts. They are deeply, deeply integrated into national security and major space exploration hardware. Then on the flip side, we have the massive pure-play commercial space companies. You've got Rocket Lab aggressively expanding its launch systems with its upcoming Neutron rocket. AST Space Mobile is out there building a cellular network that connects directly to your smartphone. Planet Labs is leading the charge in Earth observation, and Intuitive Machines is locking down multi-billion-dollar lunar logistics contracts. Now, these firms offer huge growth potential, absolutely, but keep in mind they carry the inherent volatility of being deeply tied to execution, tech risks, and, rockets actually launching successfully. All right, Section 3, crucial small space players, the picks and shovels of the space economy. You know the old gold rush adage, right? Sometimes the best business isn't panning for gold, it's selling the picks and shovels. Let's focus on those highly specialized infrastructure companies that are literally enabling everyone else to get off the ground. Take Redwire, for example. They're building solar arrays and 3D printers for microgravity. Blacksky and Spire Global are taking satellite signals and turning them into high-margin intelligence and weather data. And then you have foundational materials suppliers like Carpenter Tech, who are forging the highly specialized alloys rockets desperately need to survive intense thermal stress. Analysts actually project their earnings per share to surge by over 40% by 2028. These guys are the unsung, high-growth heroes of the entire supply chain. And the financial data completely backs this up. The year-over-year revenue growth for these infrastructure and logistics providers is scaling incredibly fast. Rocket Lab saw a massive 63.5% jump in a single quarter. MDA Space and Planet Labs are posting huge double-digit growth. This is exactly what happens when billions of dollars of government and commercial capital simultaneously flood the supply chain. Section 4, Space ETFs and Portfolios, Navigating the Market via Funds. So with all these companies, large and small, how is the broader market actually participating? Well, a space ETF offers a really smart blended approach. It essentially allows investors to have their cake and eat it too. You get to participate in the wild, disruptive innovation of those pure-play space startups, while holding on to the financial stability of those large-cap defense primes we just talked about. This is exactly where institutional capital is heavily rotating right now. Funds like ARKX and ITA are seeing historically massive capital inflows. Smart money is strategically positioning itself ahead of major sector-wide catalysts, like that looming SpaceX IPO we mentioned. By utilizing ETFs, the market is basically balancing the high-risk, high-reward growth of the commercial space frontier with solid defensive stabilization. Section 5, Bottlenecks, the Reality Check. Now we need to sharply pivot away from the hype for a second and examine the very sobering reality of actually operating out in the cosmos. Because let's face it, it's not quite as simple as just launching a server or a drill up into the sky. For instance, orbital AI data centers are an incredible moonshot concept. Moving high-performance compute clusters up to orbit for 24/7 solar power sounds absolutely amazing, but the hurdles are massive. First, launch costs have to drop dramatically, down to around $200 per kilogram. That's really only achievable if next-gen heavy lifters like Starship become fully operational. Second is radiation. Space radiation causes logical zeros to flip into ones, literally known as bit flips. So to survive, systems require triple modular redundancy, which means you have to launch 3 identical systems to run in parallel. And third, thermal cooling. Trying to cool a massive server rack in the vacuum of space where heat doesn't easily dissipate. That is a staggering physics problem. But it isn't just physics holding us back. It's politics. Asteroid mining faces a really tense international legal debate right now. The 1967 Outer Space Treaty defines space as the common heritage of mankind and explicitly prohibits national appropriation over celestial bodies. But on the other hand, U.S. domestic law and the Artemis Accords interpret this to allow commercial extraction, basically saying companies own the stuff they mine. Right now, there is absolutely zero universally agreed upon regulatory framework for licensing or property rights up there. And why does that legal gray area matter? Well, it all comes down to the financials. A recent techno-economic analysis explicitly concluded that without a detailed international legal framework, the high uncertainty means the math just doesn't work out yet. It literally results in negative net present values. The sheer risk of spending billions to mine an asteroid only to end up in a massive international property dispute simply outweighs the financial reward at this point in time. Section 6, Educational Disclaimer and Conclusion. Final thoughts on the frontier. As we wrap up this deep dive, it's absolutely vital to properly frame everything we've just discussed. Please remember, this entire analysis is strictly for educational purposes. Looking at these market caps, revenue growth charts, and ETF structures is an educational exercise designed to help you understand the mechanics and the massive scale of this emerging sector. It is not financial advice, and it's certainly not a recommendation to buy or sell any security whatsoever. Which leaves us with a pretty profound question about our future. As the cost of reaching orbit continues to plummet and a $1.8 trillion economy takes shape right above our heads, are we truly ready to build a collaborative, sustainable economy in the stars? Or, without clear legal frameworks and shared goals, are we just going to end up launching our earthly problems into orbit? It's a fascinating frontier, and one we are going to be watching very, very closely. Thanks for diving into this with us today.